Hello and welcome back to Core Finance. I am Matt Brown and I'm joined down the line by the president of Argus Research out in the United States of America, Mr. John Eade. How are you today, John?
Matt, I'm terrific. Thank you.
Absolute pleasure as always having you on the show. Now, let's start off. Last week we had a little bit of a wobble in equity markets, global equity markets, and really this was started off by North Korea. But since then, everything's quietened down a bit and the equity markets have pushed tentatively higher again. Now, where do you see these equity markets going? And with regards to valuations, are things looking overvalued again at these levels?
Man, I think I wouldn't say overvalued, but I would say fairly valued. Mm-hmm. And that's different from undervalued. So if you get a surprise, like we saw last week with the whole North Korea back and forth, at a fair value, you can get that kind of sell-off pretty quickly. Mm-hmm. But in the backdrop, the fundamentals are still strong. We saw very strong retail sales here in the U.S. I think when the government gives a second estimate on second quarter GDP, it's going to be revised higher. And I think we're on track for maybe 3% or even better GDP growth into the third and fourth quarter. So the backdrop of the fundamentals are pretty good, but with the fair valuations, you can get some sell-offs if there's some unexpected surprises, particularly in the months of August and September when they tend to come.
So you're saying, potentially if you're looking to invest in the market or increase exposure to the market, at this point you might be better off just waiting for maybe further sell-offs if we do see some more volatility towards the back end of August and, as you say, moving into September.
Yeah, I think that might make some sense. There's some uncertainty surrounding the Federal Reserve. They've got minutes coming out. They've got a meeting coming up. Nobody knows exactly what they're going to do about raising interest rates again this year. The latest inflation data has been weak, so maybe they don't move, but they probably will start to unwind the balance sheet that they built up through the QE programs. So there's some uncertainty around that. Plus, coming into September, you've got the third quarter earnings warning season. And if companies aren't doing well, they see they're not going to make their annual numbers, they typically announce that in September. And so you get some broader market sell-offs, particularly if valuations aren't low anymore.
Understood. You mentioned already a few data points with retail sales, and we've seen the JOLTS number, non-farm payroll numbers, all coming in better than expected. But this doesn't seem to be feeding through to inflation yet. But as you mentioned, we might see some revisions to the upside for GDP. So again, with the Fed, do you feel the market now doesn't really feel as if we'll see an interest rate hike maybe in December? Do you think we could see one this year from the Fed?
Well, we had been expecting a third interest rate hike this year, and we're still on record with that as a call. Mm-hmm. But this latest inflation data is raising some doubts among our team of economists that the Fed is actually going to do this. There is some slack in the labor force. The labor force participation rate is still quite low. So you're not seeing a lot of wage pressure on inflation. And oil prices have come back down, more than 10% over the past year. So really in the past 3 months. So that's kept prices low too. But I would note that the price of gold is starting to perk up. And that is typically a leading indicator for inflation. So that might be something the Fed looks at and actually makes a call to tighten once again this year.
So looking at gold, and certainly for our gold bug viewers, we saw an uplift in gold last week, and this was, I think, down to the North Korea situation, and it's since that safe haven asset it's since retrenched slightly. But generally, do you see this uptick in gold as being down to inflation or a non-inflation play?
Also, the dollar. The dollar is another factor that drives the price of gold. And the U.S. dollar had soared in 2014, in 2015, into early 2016. in anticipation of the Fed's rate hikes. Now that the Fed has started to hike rates, the dollar is stabilized and begun to drift lower. It was at cycle highs. It wasn't going to go much higher. We think the next direction for the dollar is to the downside, and that should be another support for the price of gold.
Understood. And for investors and probably yourself, will they be looking closely at the Fed minutes tonight and certainly Jackson Hole symposium that starts next week? Will these be a couple of key events to look out for?
Well, there certainly will be, especially during these dog days of August. We're finished essentially with the second quarter earnings period. A lot of people are on vacation. The volume is quite low. So, the Fed is the big news. And if they say something that's a surprise, you'll definitely see the markets react.
Well, fantastic. Well, we'll look closely at those particular events, certainly gold, and moving into the third quarter earnings season a little way off. Lots to think about there, John. As always, very, very insightful. That was John Eade, President at Argus Research. Thank you very much for joining us today.
Thanks, Matt.